for 1984 term, and he has chaired the task force for developing a code of corporate governance in Pakistan. He is currently the chairman of task force of Pakistan Institute of Corporate Governance, constituted with a mandate to review the existing code of corporate governance and recommend further improvement in line with the global best practices. He has served as a member of the Accounting and Auditing Standard Board of Accounting and Auditing Organization for Islamic Financial Institutions, Bahrain, and he has also served for several years as chairman of the Committee for Developing Islamic Accounting Standards, constituted by the Institute of Chartered Accountants of Pakistan. He has served as a member of Expert Committee on the Demutualization and Integration of Stock Exchange in Pakistan, set up by the SCCP, a Resource Mobilization and Tax Reform Commission, Government of Pakistan, and has been the chairman of the Committee of the Tax Reform Commission on Direct Taxes. Now I invite Mr. Ibrahim Sidat. Please welcome Mr. Ibrahim Sidat.
Bismillahir Rahmanir Rahim. Chairman, Federal Board of Revenue, senior officials of the board, past presidents and current council members, worthy participants, ladies and gentlemen, Assalamu alaikum. My friend Saqib Masood has given already a very comprehensive overview of the changes in the direct and indirect taxes, and the 10-minute slot that I have, I don't know where to start and where to end. Nevertheless, I'll try to do justice to the job as far as I can. Let me start like this by saying that it's a fairly simple piece of finance bill, to say the least. Simple in the sense that one would have expected in a normal state of circumstances, and mind my words, I say normal state of circumstances, which we are not. Some more comprehensive and reformative measures in the tax law. But as we all know that in the wake of the current situation that we are in, the government of the day had to resort to certain measures where probably they cannot afford taking very drastic measures. So as far as the personal taxation is concerned, it is a welcome move, as Saqib has already said, that the amount of disposable income which most of you, ladies and gentlemen sitting here, would be carrying home would perhaps be marginally improved because of the incidence of taxation being lower than what it is presently. So that is a very welcome move, and I am sure all and sundry would appreciate that. The most revolutionary change, if at all one can say that, is an attempt to bring immovable property within the capital gains net. Let me at the very outset say I am not a lawyer, I am a student of finance, that as far as the constitutional validity of this provision is concerned, I somehow feel inclined to say that it is going to be in for a long-term litigation. I was trying to go through Article 70 read with the fourth schedule of the Constitution, which lays down the federal legislative list. It does talk about the powers of the federal government to levy tax on the capital value of the assets, but as far as taxing the capital gains on immovable property is concerned, as a student of law, I would say I am a bit skeptical about it, to say the least. And it certainly will be put to judicial test in due course of time, and let us see what comes out of it. Whether to tax capital gains on immovable property as an economic measure or based on economic justification, it is entirely a different subject. I am right now talking in the realm of taxation and with regard to income tax and within the domain of the income tax ordinance itself. You already heard from Saqib, and I will not repeat. There are two slabs, one which are assets which are held for up to 1 year, and those which are held for more than 1 and less than 2 years. And after that, interestingly, the finance bill does not say what will happen, although one can imply, and this is the inference I am drawing, that sold after 2 years, there will be no taxation on such capital gains. But the bill does not say anything to that effect. Whether it is an omission or whether that is something left to the imagination and interpretation of those who are likely to be affected by that, again time would say. Another change, which is not really a change because we saw it only in the form of a presidential ordinance about 2 months back, is with regard to the capital gains on listed securities. Only one aspect of that which has been the subject matter of a long drawn debate is the immunity given on no questions asked about investment made up to 2014. I know that there will be views equally divided on both sides, or at least there would be equal weightage given to the arguments on both sides. This kind of immunity does not augur well for the health of the fiscal system. Although this country has seen a number of whitening schemes right from Ayub Khan days, there has hardly been ever any government, including the last Musharraf government, that there has not been one sort or the other of immunity or whitening scheme of one nomenclature or one particular form or one particular structure or the other. This, I think, has been done with an avowed purpose of giving some fillip to the stock market, but giving it a carte blanche up to 2014, at least as a student of taxation, I find that there is not much of justification in that. If there was at all any difficulty, and as we have been reading in the newspapers, that the difficulty which was espoused by the interested and vested quarters was that people did not keep records for the past. Maybe so, I don't know. People who have money have that much sense to keep some form of record of one form or the other. That could not be the reason. But even if that be conceded so for argument's sake, then one would like to rationalize by saying that that particular cut-off period should have been 2012 at the most. And at that point in time, a declaration should have been made by those who have been owning those assets, those securities in listed companies. And after that, the normal rules of the game should have applied. But anyway, it was already a presidential ordinance which has been transplanted into the finance bill as is, with some changes in the tax rates, which I am not going to repeat for want of time. And so it is there. Let us see how far it will augur well for the stock market and for capital formation and for the overall health of the corporate sector. You have heard ICAP deal with different provisions with regard to tax credit. In that context, I have got one very, very simple, very humble submission to make. Tax laws in this country, ever since I started being a student of taxation, and I dealt with the 1922 law, the 1979, and thereafter the 2001 and the current one. As far as the taxation is concerned, in one form or the other, we always had some tax holiday, some tax credit, some tax incentive scheme always on your statute book. Starting from section 15BB of the yesteryears, and thereafter in a variety of forms, sometimes in Jadoon and Chunia and this and that and that and that. There has hardly been ever studied, at least not publicly known, and I have served on a number of tax reforms commissions and committees all my life. 40 plus years of public practice gave me, by the grace of Allah, enough opportunity to peep into the fiscal system of this country. And I will only be able to scratch the surface of that. I don't claim that I know everything about it. But whatever little I know, I can say that such provisions do not on their own bring the desired results. You have heard Mr. Asad Umar very eloquently and very, very rationally bringing out the threats and the potential opportunities which this great country of ours has. How far these tax credits and incentives will translate into practice, and has there ever been any study carried out by Planning Commission, by FBR or by any governmental agency, that what has been the impact of such provisions